Who is economically disadvantaged? When the SBA evaluates an 8A application, it requires that the qualifying owner be both socially and economically disadvantaged. The following are the three general thresholds for being economically disadvantaged. It is important to know that spouses are not included in this calculation and should be broken out separate from the applicant. First threshold, personal income and net worth. The applicant must have an adjusted net worth of $250,000 or less. This calculation is the individual's net worth with the following exclusions: the equity in their primary residence, the value of the 8A applicant firm, the value of the individual's retirement accounts, such as 401k or IRA. Note that once 8A certified, for continued participation in the 8A program, the adjusted net worth of the qualifying individual limit is increased to $750,000. Also note, a contingent liability does not reduce an owner's net worth, meaning a liability that may or may not occur based upon the outcome of some future event cannot be used to help the applicant meet this criteria. Second threshold, personal income. The 8A applicant's income must be less than $250,000 per year on average for the previous 3 years, excluding any Schedule K income from the 8A applicant business on the tax return. Third threshold, personal assets. The applicant's total asset value without exclusions must be less than $4 million. There are three other areas that are important to understand when evaluating economic disadvantage: transfers, withdrawals, and SBA Business Profile. Transfers. Transfers that are made to family members within a 2-year window of an application for below fair market value will be attributed to the net worth of the applicant. For example, if an applicant places assets in a trust 1 year before applying for an 8A certification, those assets placed in trust will be added back to the net worth calculation. Withdrawals. If withdrawals from the company's retained earnings are deemed to be excessive, then the owner will also be barred from certification. This calculation of this limit is as follows: a $150,000 withdrawal for sales up to $1 million, $200,000 in withdrawals for sales between $1 and $2 million, $300,000 in withdrawals for sales greater than $2 million. SBA Business Profile. The financial profiles of the small business will be compared to the financial profiles of other small businesses in the same primary industry classification or similar line of business. The firm cannot be in the top few percentiles, 3 to 5%, of businesses in the following areas that the SBA will compare: total assets, net sales, pre-tax profit, sales versus working capital, net worth. Providing an applicant individual and corresponding applicant concern are economically disadvantaged requires many detailed calculations. Thanks for watching. To further evaluate you and your firm's potential application, you can go to our website and use our pre-qualification tool, or give us a call. In about 10 minutes, we can give you a good assessment of your application.